Welcome back. Siddharth Vora of Prabhudas Lilladher is now joining us. We're discussing this broad theme of mid caps and small caps and whether the interest is going to last. We got you an expert from ICICI Securities last week, and today we have Siddharth Vora of Prabhudas Lilladher, who's come out with an interesting report which tries to look at past multi-baggers, stocks which have been multi-baggers in the past, and looking at whether they can repeat the success. As the old saying goes, not the old saying, but the commonly used saying goes, the new HDFC Bank is the old HDFC Bank. So I think Siddharth has taken inspiration from that and more. It's all quant based, so he's looking at various parameters for the purpose of identifying some 30 odd stocks that he's put out in this report. He's looking at only micro, small and mid cap companies. If you can have the graphics up. So, very small stocks he's looking at, listed for the last 10 years at least. Stocks whose market cap went up at least 5 times in the last 10 years. Companies trading at least 35% below their all-time high prices. And there are a whole host of financial conditions, profitability conditions, return ratio conditions, which these stocks must meet, which will keep flashing on your screen. Let me throw it over to Siddharth to explain this to us a bit more. Siddharth, morning, take it away.
Hi. So firstly, we wanted to make sure that we focus on the right segment of the market. As you know, with the large cap rally and the flight to safety and the flight to quality, some of the mid cap peers have either been punished hard or not performed as well for no major change on the fundamental performance. So we also wanted to know that as the economy goes from a slowdown to a slight recovery. So according to our macro meter, it suggests that the rate of slowdown in the economy is currently decelerated. So now as we go through a recovery cycle, hopefully which we will, historically mid caps and small caps have outperformed large caps during the recovery period. So it was very important to first identify where to focus on, and hence we arrived at the mid cap, small cap universe. Then we also wanted to make sure that the listing tenure is, significant. So we have a broad idea of how these companies have performed over a longer term and what are the business characteristics and management competence on a decade basis. And obviously growth, the long-term growth story must be intact. So we ensure that, the recent, the latest sales, EBITDA and PAT are at least 3 times that of what it was in 2009. And this was to ensure that over a longer term, the company's business models have been able to scale up, have been able to increase the size of their operations and penetrate markets deeply. More than that, cash flow is king, as everybody says. So we wanted to ensure that if they are earning 100 rupees in profit, at least 40 rupees goes back to them as operating cash flow.
Siddharth, just one point. Sorry,
sure.
We've got the criteria flashing on the screen, so we are showing all of it. Just one point. What is the market cap criteria? Companies, and how many companies did you start with?
Started with all the listed companies below 20,000 crores.
Okay. Siddharth, this year is expected to probably be a year where the mid caps and the small caps recover. Within this entire list, have you narrowed down into companies which you would probably be focusing on or recommending to your clients?
So, as a disclaimer, we could be owning one or more of the stocks. And the idea is still to focus on the framework and the model, and the qualitative research side can deep dive into which particular stocks they like out of this universe. It'll be out of my scope to discuss about it. But if I take you through the broad performance of this framework on a 1-month and 3-month basis, it's outperformed its mid cap index benchmark and small cap index benchmark by a significant margin. If you could just maybe flash the returns of how this model has performed in the last 3 months.
Okay, sure, fair enough. We'll do that, Siddharth. So basically you're saying that y'all are betting on all of these stocks, from the Balkrishnas of the world to the Canfin Homes to the Ajanta Pharmas, going into this year, though it's out of your scope. That's basically what you would be recommending, because we can pull that up.
Yes, we would, and especially from a sectoral basis, auto ancillary looks interesting because it's got a lot going in that sector from a on-ground perspective and a quant perspective. As you would know, as the PV cycle and CV cycle and two-wheeler cycle revives, capacity utilization will go up, OEM order cycle will increase, and all the auto ancillary companies are focusing on increasing content per vehicle. And over and above that, localization is really, come into play with the auto ancillary companies due to much lower cost of production compared to the international peers. So even the export side of it looks interesting. So if you see, 11 out of these 30 stocks are from the auto ancillary sector. And if I can just pull the numbers up quickly, it's returned 29% or 30 odd percent in 3 months versus the Nifty Auto Index of 6.5% return. So I think broadly using some of these parameters, we can arrive at a universe of stocks that can help us, generate some alpha.
Okay, all right.